Hi trader, this video will explain how to use our live daily analysis, what are the charts saying, and what do we find important. That's the focus of this webinar and video. First of all though, be aware of the risk involved when trading. Please pause the video to read this entire disclaimer, and of course trading for exchange is considered high risk. Please seek the advice of an independent financial advisor for more information on that, and this video is for informational and educational purposes only. Plus, of course, the live daily analysis is also for informational and educational purposes only. All right, let's take a look at the first example here, one of the 50-minute charts that we were showing. Three of us are working on this live daily analysis, and you can see here a 50-minute dollar-yen chart. Now, this is one of those examples where everything I think is pretty straightforward. You see the sell levels, you see the stop loss level, and you see the take profits. Not only one take profit, but in fact 5 different options. I do need to explain a bit about what those options mean. The first target is actually the main target. It is the main goal. It is the one where we have the greatest confidence interval. It's the one where we think that it is most likely going to hit. With target 2 or TP2, that is TP1 I talked about, TP2, the confidence interval basically drops a bit. We are less sure. Obviously, the price is a bit further away from the entry, so there is less certainty whether the price will hit. I would say that roughly we estimate a 70% to 30% chance of that price target, that TP, being hit. With target 3, of course, that goes down. We would expect about 50-50 for the third target to get hit. For the fourth target, we would say probably roughly around 30 to 70%. So obviously, if you're aiming for more reward to risk, it is possible for us that we aim lower, but of course the chance that the target gets hit is also lower. So that is a bit about an explanation about those targets, the TPs. TP1 is always the main target, and the further down the list we go, the less likely, of course, that target has a chance of hitting. So which one we choose will depend on the market structure. We will explain which one we're aiming for, but we will add, in these cases, several targets that we think are the best, and various, of course, opportunities. One that is more likely, the other that is further, and less likely, but of course offering more reward. So that's just adding an additional kind of layer for exits and targets. The stop loss is something that we will always put at the invalidation level. So that is where the analysis is invalidated. It is not anymore something that is current. It is not a setup that has any validity, of course, at that point. That's where we want to exit, because if we exit somewhere earlier, then the trade could still go our way, and we just exited, perhaps took a loss, really without being proven wrong in the market structure and the view of the market. We want to, of course, losses will happen, and we want to take a loss at the spot, at a moment where our view, our market analysis is indeed invalidated. That is the moment that we say, okay, a loss can happen, and that's why we have stop losses. Not earlier than that. The entries will depend, will at some, of course, moments be based on fibs, as you can imagine, some moments on waves. Nenet will also share his updates. Those will be more based on Camarilla and the MACD and his price action and patterns. So there will be a bit of a difference in what kind of setups you see. Please take a look at the profile on the main page to see and read a bit more about our personal styles. The three of us have slightly different ways and emphasis on things. So you'll see the differences as you go along. There's a mix of price action and indicators and market structure, and I think that everyone will find something that they enjoy and appreciate. Now, that said, let me show you an example, for instance, of a chart that Nenet has shared this week. That is the pound yen 1 hour chart, and you can see Nenet using fibs and his Camarilla indicator and his ATR and looking for point of confluence, right? Great stuff there. That short ended up with 50 pips profit, and perhaps even more depending on your exact entry there. He explains it in text as well. Text is something we add to give an extra explanation besides the image. Now, this is your dollar setup that I talked about and showed ended up for break even. Not all trades will necessarily have an exact entry and stop loss. We will try to provide a 10 pip range where basically you can enter within a 10 pip zone so that we avoid an exact price level. That is, of course, always our idea for ourselves. Whether you use that is your decision always. But we will give a range that we think for ourselves is valid of 10 pips. That said, not all trade setups will have exact levels. In some cases, yes. In some cases, no, because it depends on the development of the price action that we expect. Here, for instance, we have arrows indicating most likely paths. Here, there's an exact entry. In this case, we show arrows. So when you see arrows, there is not an exact stop loss or TP or entry, but there is a rough zone where we would expect to bounce and some text that explains what the most likely price action is. When you see that, then in that case, we're using candlesticks at those levels to confirm a bounce. So in that case, we're not confident enough to take a pending order, but we are confident enough to share the analysis. And then in that case, we're on the outlook for confirmations through price action patterns at those bounce and break spots. So there'll be a mix of that, and there will be a mix of exact levels. That's how we're going to share it with you. We, of course, are always looking forward to your feedback. We'll be as precise as possible, of course, but we wanted to give you an explanation of what we think is an invalidation, what we think is the TP, the stop loss, etc. Managing the trade. In most cases, we will share how we managed it or how we will manage it, or our expectation of how to manage it, for instance, using fractals or candle lows. In other cases, we'll say we're going to protect the profit. That means we're going to use a tight trail. In other cases, we'll explain that we'll be looking for particular reward to risk. So managing the trade is not something, of course, that we could be very, very precise in because the market is fast. We encourage you, of course, to use your own methods for that. We will share as much as we can, but it is our duty as trader to protect the profit and reduce the risk at the right time. That is why we'll have educational videos, of course, as well, how to manage your trade and basically, trail stop and find the right balance there as good as we can. We'll try to do that with educational webinars. With live webinars, we'll try to give as much info as we can, but sometimes we'll just have to give a rough indication of what we do, and then, of course, it's up to you, that the trader, to take the final call and final decision, as, of course, always is the case. So thanks for this. Thanks for listening. Wish you all great trading. Talk to you soon. Cheers.